Good morning, everyone. So this morning we caught this. We spotted this pair. This is Euro GDP. So I was talking about the bull trap and the bear trap. So I quickly want to use this life example to illustrate what I mean by what I drop on the Discord group this morning. Okay, so um, let me take all this off. Then we can start from the beginning. So uh, let's look into how the top down analysis for this pair. So the top down analysis for this pair is you see that has already turned weekly has already turned bullish. So if weekly has turned bullish, so what are we looking at? We'll look for daily to see what is happening on daily. Okay, daily too is bullish. Daily too is bullish. In fact, yesterday's candle closed bullish. So now this is the weekly demand zone on a gray area here, and it's below the true opening months. So um, let's move to 4 hours so that I can explain exactly what I mean when I was saying uh, so. So you can see price is making higher highs, higher lows, higher highs, and higher lows. You know, so if price is going to continue moving up, we're looking at this demand area, this weekly demand area that was broken. That is where it's appropriate for us to wait for this trade. We are supposed to wait for this trade to make a turn around here in 4 hours and drive down, then make a turn back, resume back to the trend. But presently, we don't know when that will happen because this can take like a month for all this to happen, for what I just said to happen. So what are we looking for here? So we're looking for a minor range to trade off today. So if we're to look for a minor range, this is 4 hours, right? So far 4 hours too is bullish. You can see this is the range here. So I'll take my fib, the 4 hours range that got broken. So there's a 4 hours range. We all know that EG is all like always very choppy. So I'm going to be marking the gray using the gray box to mark between the 60% and 70% ratio, then I'm going to take this off. So this is the 60% and 70% ratio. Remember, we are bullish on daily, we are bullish on weekly. So our lower time frame just need to align with it. And this is 4 hours, also bullish. So and this is the premium range. So let's go to 1 hour. So in 1 hour, what are we supposed to be looking at? We're supposed to look for a pullback, which is going to be the liquidity generated uh, for institutions to buy into their positions. Because if there's no sellers, there's no buyers. So we need more sellers for the trend, the minor range trend to resume. So the first pullback we had here was this area, and I think we have the second one here. So So if I'm to go to 5 minutes to streamline and see how this price has distributed, it makes it easy. So now from 1 hour, I come back to 5 minutes. I've already marked the first. This was the first pullback. So this first pullback, we already know that in a buy scenario, this is going to be our selling climax. So, and this is going to be our test. Don't forget, we are trying to explain what a bull or bear trap is. So this is going to be our test. So if this is our test, so and if you look at it properly, what does this test do? This test has already given what? A a bull trap. A bull trap. This is a live example, guys. It's not a cherry pick. The trade is still on. A bull trap. So here's a bull trap. So what makes a bull trap? You can see the test came, even give sweep sweep the first swing of the London quarter, sweep it and even dip below the 2 week open, which I explained in the morning and I've explained in my other videos too. So you can see here, what we have here is you will see that we have a break of structure. Not only here, there's a break of structure here, breaking the true London open, giving us a retest to buy back up. So now this is a bull trap. Why is this a bull trap? Because this is our climax. So for us to buy into this position, we are expecting, what are we expecting? We're expecting this level now come and clear out both the test and the climax and touch the premium zone, because this gray line, don't forget, we drew it from 4 hours, right? And it is between the 60 and 70%. So it has to purge and give us something, touch, it has to touch this zone. So after touching this zone, we're expecting to see price start moving back up, start moving back up, then even use the bull trap as an entry to buy for the day. It's as simple as that. So your entry can be here. This is not too valid. Your entry can be here. This is valid. And your entry can also be here. This is very, very, in fact, the validity here is, this is the most valid here. The moment price break this level and retest it, this is where you get your that rapid movement you're looking for at this level. So where is this level? Let me put a cursor on, so you can see the price is marked in blue line. So it's marked in blue line, and so guys, this is what a trap is, a bull trap is in an example. You can see I've break it down, so it's left for you to go and check it yourself and look at the live market. And I bet you'll be surprised of what you've been missing out and how you've been, you know, getting into trouble not knowing, because a lot of people here now is taking entry to buy, because now we have a sweep of, now this is the area, the smart, the SMC traders, the ICT traders, this is where they missed it. So now at this test area now, they're already looking for FEG here. So they're already taking the retest and the FEG around here. Meanwhile, this is just a bull trap. So the test will give you a bull trap always. Most of the time, it will give you a bull trap. Like 90% of the time, it will always, once you see your bull trap, you should know something is going to happen. and we clearly marked out our selling climax. So until this selling climax is taken out and this zone is being touched, because this zone is the 4 hours 70-60% range. So that is what it is. Thank you, everyone. I hope you enjoy this, and don't forget to send it to your friend and family that is also struggling with forex. Thank you. Bye.